Morning, everybody. My name's Nick Rickson. I'm the top picture in your screen at the moment. The good-looking guy at the bottom, Pavlo Phitidis, I'll introduce you to in a moment. What I wanted to do really was thank Pavlo for, I was going to say coming over to the UK, but much easier today than the version we'd expected, which was having him here live. For those of you that don't know me, I've been running a number of coaching stroke training consulting businesses, one of which I built to a global business, and more recently a very boutique small team delivering on exit strategies, and consistently and continuously came up against problems for business owners with how we get them a maximum exit. And I'd always been looking for that missing piece, and really didn't find it until I got introduced to Pav about 9 months ago, initially, our first meeting. And I had a very excited feeling that I'd met somebody who had the missing piece that I've been looking for. One of the few consulting, training, coaching businesses in the world that, or coaching businesses anyway, in the world that had really focused on the exit multiple valuation, rather than being a bit more efficient or a bit better at various individual items in the business. So I'm really excited to have Pavlo coming over to the UK. Today, what he's really going to identify, and what I thought he articulated brilliantly well, was the issue that small businesses have. I hadn't really seen the research that he'd done anywhere else before, and it fascinated me with the kind of issues that he came up with from his own experience. He's built a number of businesses himself, and he's going to talk you through what they actually did that was different. He got some very interesting results, which I think if we're a small business owner today, there's a huge amount to learn from that. I wanted to talk you through how he then grew their businesses, which was the one reason for getting involved. Off the back of that, what he then went and built as a service to other SME businesses, so how they work with clients and what they built, and a little bit about the Aurik business incubator accelerators back in South Africa, and what we're looking to do in the UK. And also why he now thinks this is one of the best times ever to be investing in our businesses and growing. He's engaging, he's fun, he doesn't mess around. So I'd like you to give a warm welcome in your own way to Pavlo Phitidis. Pavlo, over to you.
Excellent, Nick. Thanks so much. And thank you for arranging the occasion to talk about my favorite subject, which is business growth and especially valuation. I'm going to get straight into it because there's quite a bit to cover, and there will be occasions, Nick, where I'll pause and receive questions just to ensure that what's coming through the chat line is addressed. I'd really like to get questions. I'd really like to understand, hear, feel, see, think what you might be listening to, what you might be considering within your own business. So please use the chat line very actively.
What I'll also suggest, Pav, is when you've done your first piece of the issue that's sitting in there, if we've got people agreeing with that, I'll take a couple of minutes and just get people to think about the questions they would like to have answered during the presentation.
Fantastic. Brilliant. Okay, so getting straight into it. Business growth and exit. Where did it all begin? I was born to three entrepreneurs, my father and two brothers. They all started businesses. They ran their businesses for years and years and years. It was a family of entrepreneurs, but failed business owners. They were successful as entrepreneurs in that they stuck to their knitting. They developed deep expertise in their areas and domain of interest. They were in three different sectors. And Nick, they did everything right. They worked hard. They stuck to their knitting. They used to bring home suppliers and customers and staff. They really built tremendous culture. The one uncle worked until he was 89 years of age, the other until he was 86. And my father would have had a very similar fate had it not been for an intervention. They worked that long, not because they loved it, but because they largely had to. And these businesses were businesses employing anywhere in the region of 20 odd people. The largest one was employing around 58 odd people. It got me wondering about what business success actually means. Because I'd always believed that a success in business is beyond earning an income from it. You enjoy the benefit of a capital exit. As any business owner would know, you throw everything you have into that business, and you really do wait and hope and pray often that capital exit will be the reward that you can enjoy. So in any event, distressed about this, at some point in time, I spent 1.5 years in the States, and I got access to some incredible data from the IRS. Very accurate data, very detailed data. I sliced it and diced it. And to my horror, I discovered that 94.6% of businesses started in the US fail to sell. They actually close at obviously a great cost to the family, to the business owner, to the staff, to the customers, to the suppliers. And it really got me wondering, if hard work, dedication, and focus didn't do it, and if the economy, a very vibrant economy, a very positive economy that supports the initiative of starting a business and building a business doesn't do it, where is the problem? And that's what I set out to discover. Over a period of time, I identified a number of problems that impede growth. The first is responding to a competitive, noisy environment. Nowadays, there are very few businesses that are uniquely special, that are very well protected, that have big moats around them. Those that are typically government-related or monopolies in some shape or form. But most of us, especially into, I'd say, Nick, up to about the $30 million or £30 million a year business, face a tremendous amount of competition all the time. How do you distinguish yourself? How do you set yourself apart? How do you prevent yourself from becoming a commodity? Was one of the big issues that certainly came out. The second one was finding, winning, and holding especially customers. There are many businesses out there that provide projects, for example. It might be the development of a piece of software. It might be a piece of plant and equipment. It might be a physical structure of some sort. Or it could be a piece of human capital work that you're developing. What happens afterwards? How do you secure that customer? How do you hold on to that customer? How do you compete effectively for that customer when that work is classically, typically tendered? How do you grow without chaos? Was a big issue that I certainly got a lot of exposure to and saw occurring. There's a wonderful point in time at which point, if you don't get the underlying fulfillment platform, the operations platform of your business right, you can grow, and you can certainly grow, but the growth, the increasing growth rates are chased by the increase in operating costs. And if not, they're chased by chaos, where as you focus your attention on growth, the moment you do, you haul back into the fulfillment operations part of your business. And it creates a very, very lumpy, uncomfortable curve of growth. Building and holding the right team. Increasingly, when I speak to people right through the landscape, from corporate all the way through to small, medium business enterprise owners, they say, if you want something done properly, you need to do it yourself. I think people are very hard to manage. It's the single most unpredictable part of a business. A lot of businesses get hamstrung by superb talent. And when you don't have the superb talent, how do you grow? It's a question we'll certainly get to. More time leading, less time doing. Very many business owners I speak to, Nick, get trapped in operational activities. They themselves have got very good insight into where the big opportunities are, where the deals that could be done that would make a significant difference to the business could be made, but there isn't enough time to simply do it. They're very wrapped up in the operational aspects, whether it be in the delivery of the service or the management of the team. And then securing the right funding is becoming increasingly hard. If you build a business right, and we'll talk about what I certainly define as that, and from what I'm seeing, is the shape of a rightly built business. To grow a business, to accelerate its growth, classically, you're spending money on technology, you're spending it on marketing, and you're spending it on team. And there are very few funders I know who enjoy funding those types of intangible assets. A well-built business that relies on those intangible assets needs to be built also to suit a funder, and that's where the ideal valuation comes through. And then lastly, how do you grow and deepen profitability at the same time? We are competing in a world that's becoming increasingly commoditized. And if you don't separate the marriage between your turnover growth rates and your operating overhead growth rates, you're simply growing into more complexity, a larger business, and foregoing the valuations for a better built or more profitable business. So with those well defined, we set out to fix them.
So before we jump into that, I think you've just written down every problem I ever had in every business I ever built. I think the phrase "Where the hell were you when I was trying to flog my 5th, 6th, and 7th?" I built 12. I think I successfully managed to sell 4, more by luck than judgment, if I'm honest, going way back when. But you're right, 8 of them I either shut down. We never went bust on any, but we either shut down or let go, or and let all the value go. So fascinating. I don't know whether the participants we've got are having the same problems, but what I'd love to do now is just get some, give them just an opportunity to grab a piece of paper and jot some questions down if they have any. And if we can just take 60 seconds to do that, that would be great. So if you're on the call and you've got a specific question that you want Pavlo to answer during his presentation, if any of those issues resonated with you, we'd love your feedback. At the bottom of the screen, you should have a chat box. I've put a couple of suggestions in there. Please put the questions in there. I'm keeping an eye on that so that I can interrupt him and nudge him and just ask him the right question. And on a purely technical, if any of you want to spend 30 seconds, you haven't got yourself familiar with Zoom yet, at the top of your screen, you should see a green bar or a bar that says you are viewing Pavlo's screen, and you should have a view options. If you click view options and select split screen, if you haven't already done that, you'll get Pavlo to the right of your screen and the presentation to the left, and a slide bar so you can expand one and contract, so you can actually watch Pavlo and the presentation. Not going to spend a lot of time on that, but if you do that, that'd be great. And if you pick the gallery view as well, then you sadly get to see both Pavlo and I while he's presenting. If you just want the speaker view, which is the preferable one, I'm told, you'll just get him speaking. So if you've got any specific questions, so first couple are coming through, thank you. Statistics for the UK, stuff like that. Yeah, absolutely. I may be able to help with the UK. I think he's got them as well. So get your questions through. The more you ask specifically for you, the more what Pavlo can present will be relevant to your business. So just take 60 seconds to do that.
Nick. I'll continue in the meantime. I'm sure the minds are churning. So what we did, Nick, is we had to learn. We had to learn how to fix these problems, because the problems have been around for a very long time. It was quite clear that the technical institutions, the institutions of higher learning, weren't getting it right. The number of people I've seen sit on MBAs and be given generic content as to how to build a business that never translates into very practical activities or the practical output of a business being built is famous. We went about it very differently. We started, built and sold 12 businesses from the get-go. 2 failed, 2 IPO'd, 3 were sold through a management buyout, and 5 were sold to corporate entities seeking to acquire profitable, innovative businesses. And we got a really good return out of that process. It was a process that ran over about 9 years, and whilst the returns were fantastic, the actual insights were far more valuable. What we noticed is that the last handful of businesses we built took around 50% of the time and around 30 to 35% of the investment to build to the same value as the first handful. There was a dramatic improvement in the efficiency of the build out itself. When we realized that this was a structural approach to building a business, a very organized, systematic, structural approach, we said, right, there's an opportunity to provide this as a service, but there were 2 requirements. The first is it would be people-driven and human-driven. In that, how do we create a quality experience for any clients that we are working with? We spent a tremendous amount of time looking at that, because what we needed to avoid was a situation where, in offering and providing a service to a client, the client would become dependent on us. It didn't feel that that was the position we wanted to attain. We wanted to attain a position where a client would be able to understand the opportunity, grasp the opportunity, practically implement the opportunity from session of engagement to session of engagement, and do so in a manner that the experience really matched up to expectations. We then also focused on how do we measure impact, and that was a big issue for us. We have positioned ourselves as a growth service, and so far to date, with over a couple of thousand SMEs that we've worked with, we've managed to hit some very interesting growth numbers, which I'll share with you. Lastly, in order to tangibilize everything we do, we created a dashboard where we collect extensive data on every client that we work with and create a customized dashboard for that client. In there, you can see the work being done, more importantly, how everything stitches together and how collectively, when aggregated, it impacts the valuation of the business. With that in place, we've worked now to date with over 2,600 SMEs. The smallest starting SME from an annual revenue point of view is around £700,000. The largest starting SME that we've worked with is doing close on £40 million a year. What's interesting, Nick, is that the average age of the business owner that we've worked with has been mid-40s to early 50s. And I think that's telling in its own right. You know, as you get into that stage of your life cycle, you start to realize that you might have 5, 10, 12 years, 15 years ahead of you. You suddenly realize how hard it is to actually systematically build a business without depreciating its value, even though you might be growing. And you're looking for a more structured approach to ensure that you bake in good valuations in terms of the build itself. The numbers that I was referring to date, our client average annual compound growth rate sits at 29.8%. Sure, within our portfolio, there are businesses that are growing slightly faster, businesses growing slightly slower. The average, however, has been a consistent 29.8%.
And if I'm incorrect, that's in a market with zero GDP growth for the last 5 years.
Yes. Look, we are very, very experienced in working in crises markets. Zero GDP growth and also a lot of business interruption as a result of power issues and all sorts of other issues that have impeded the progress of these businesses. What's interesting about working in the mid-tier sector is very large corporate entities take time to respond to a changed environment. Very, very small businesses, the one-man show, the survivalist businesses, often don't have the resources to be able to adapt to a changed environment. I'm a firm believer that the mid-tier businesses, where there is some traction on the ground, where there is some reputation, where there is a team, where there is a focus on product and service that's well refined, really face the best opportunities, especially now in this COVID economy, for growth. So how do we do it? I suppose that's really the secret sauce and really what matters over here. We work with our clients, Nick, in order to build what we refer to as an asset of value. And let's just pause for a minute on that. I think it's really important that every business owner, rather, every entrepreneur also has a business owner hat on. The entrepreneur is very focused on opportunity, creating opportunity, generating income. The business owner hat is very focused on capital growth. And there are 3 elements that make up an asset of value, or 3 features that define an asset of value. The first is it's a business that grows its capital value on a year-to-year basis. Ideally, you start the business, you might start it with very little, but when you do manage to sell it, you sell it for that capital profit, that capital gain. The second thing is that the business must generate income. Like any investment you would make on a stock exchange, you're hoping for the capital appreciation, but you're also looking for a dividend stream. And the third feature, which is probably the hardest to get right, is that the business needs to be built independent of you. In other words, it needs to be tradable. There's no value in holding an asset on an exchange, for example, if you can't sell the asset, if you can't trade it, if there isn't a ready market that is able to buy that asset and to buy it at the price that you think is fair and fit. From my experience, that is the single biggest issue that fails valuations dramatically. When you build a business into an asset of value, you attend to all 3 of those elements. The starting point, of course, is why do you exist? And a lot of us apply our value propositions out there based on our product, arguing that we have a fantastic product. Or we argue that our service is what sets us apart. And increasingly, we're arguing it's our price that sets us apart. Certainly from what I'm seeing, those 3 propositions have no sustainability behind them. A good product today can be superseded by a good product tomorrow from your competitor. Service, whenever I look at service, is so fundamentally dependent on people, and very often the business owner and the leadership team themselves, that should any one of those individuals not be there, the so-called excellent, consistent standards of service get compromised. And finally, price. Price is not a game to play if you're looking for valuations, unless you have a tremendous amount of funding behind you, and in effect, you're building a high volume, low value, very scalable, multinational enterprise in some shape or form. We argue that what should distinguish these mid-tier businesses is brand, and we define brand slightly differently. It has very little to do with the advertising work that's done out there. It has very little to do with the logo, and it has everything to do with the experience and problem set that gets solved through what you do for your clients. That area of distinguishment is hard to craft out. When you have a great product, you hope that the product simply solves the problem for a client. When you have a great brand, you simply hope that the brand itself will create the experience for a client or a customer. We did some very interesting work with BMW, recognized brand. We did so with all their dealerships. Their dealerships were struggling with sales. The big issue over there is people were relying on the product, the BMW motor vehicle, and the brand BMW to draw customers in and to hold customers on board. You need to distinguish yourself differently. Who do I serve? More importantly, what problem do I solve for them on a quantified basis? And in solving that problem, what experience do they want? A client in the mining sector wants a very different experience to a client, for example, in the hospitality sector. Defining the sector, defining the problem, defining the experience across all the sectors you serve is where you set yourself apart from a positioning perspective. I've got a really good example. A client that we work with, a watch retailer, second generation family business. Post 2008, they found themselves in very, very troubled waters. With austerity, the credit crunch, they argued they were in the luxury service market from a retail perspective. Their sales had completely tanked. They were in trouble. We did some very interesting work with them and immediately moved away from the expensive watch category that they said set them apart in the luxury market to understanding why people buy expensive watches and to understand what experience they want, that this retailer would be the right retailer to do so. When we reposition the business around who you serve, the problem set that that customer experiences, and the experience they need, they outstripped and outperformed the competitors to the point where this business grew in 2010, 11, and 12 at a 24% compound annual growth rate, taking it from a 2.8 million rand business to when we finished our work with them at around £4 million per se. Positioning is what set them apart very definitively. Once you have your positioning right, the next thing we look to do is to turn that positioning into something that's delivered through your commercial systems, your business systems. And the business systems include your marketing systems to generate leads, the sales systems to convert the leads, the fulfillment systems to fulfill and deliver on the promises you've made. We define systems as all the activities that get put into a sequence and that can be measured, against which a job description can be described and designed, and against which training material on how the system operates is built. When we get to a position where we understand our positioning, we know who we serve, we know what problems we solve for them, and we know the experience they want in having those problems solved, and we deliver that through systems before people, it means mechanically the business will operate in such a fashion that that positioning will be achieved and attained with a high degree of reliability and consistency each and every time. Getting that right is fundamental and crucial. It's also the earliest stage of removing you from being the cause or the central reason that the business exists. I'll share an example with an industrial baker that we worked with over 4 different events in the last decade or so. The individual in this case was a 55-year-old business owner. He had started the business at the age of 29. He'd been in the game for a long, long time. He was doing about £4 million a year in serving the hospitality sector with continental breakfasts. And all his relationships in the hotel groups were relationship driven. He was a known entity. He was the doyen of the baking industry. All the food and beverage managers in all these big groups loved him. He loved them. Warm embraces with every meeting. The business had stalled at the 4.1 million mark. And that's when he said to me, I want out, I want to sell it. He had tried to sell it for 2 years in the market without success, because every single buyer recognized that he was the central cause of those relationships. So we did work with him to systematize all his lead generation, lead fulfillment, and lead conversion systems. We extracted all of the approaches that he had adopted and converted it into systems with him. And that put him in a position where those relationships were then being maintained almost mechanically, and the operations were able to carry a life of their own. It put him in a position where he could identify the right people to do the right thing and effectively manage through team the systems on the basis of how he had provided before through direct interactions, the experiences. Over a decade, just over a decade or so, through 4 interventions with us, in December last year, this business closed at just under 36 million pounds of annual revenue. System of delivery follows the brand positioning. It brings it to life mechanically. Once you have that, it puts you in a position where you can get the right people to do the right thing. And this is a crucial element, because finding good talent at an affordable level, holding on to it, and ensuring that that talent is all aligned and well orchestrated and coordinated is a tough element of the scale process in its own right. If I revert to a technology business that we worked with, it was with an individual. He was 42 years of age. He'd run his business for around 3 years. Prior to that, he had worked in all the big brand mobile networks globally. He had a really good understanding of the voice and telecommunications environment. He believed that the future lay in data. This is about 6-7 years ago. Pretty good mind, pretty good reading of the future. He started a business. Because of his reputation, because of what he'd delivered before, over a period of the 3 years, he had managed to get top sales professionals into his organization. They all came to him because of his reputation and because they saw too that he had identified the future and he was closing a gap very neatly around it. When he came to us, he said, if you want something done properly, you have to do it yourself. And I said to him, how so? And he says, I poached the top talent I could get from all my former engagements in corporate life. They came on board, they had big reputations, not one of them could deliver, and not one of them has remained. It's put me in a position, of course, where I have to now lead sales development, whilst at the same time manage the business strategically. So he was stuck at that level. He was stuck sitting at around 1.5, almost 2 million pounds a year. We went through a process where we clarified positioning, redefined it, put the systems in place, and against the systems, for the first time, Nick, he could recruit more effectively, not against the classical area of recruitment where you look at a very, very well-structured CV. He looked at what was needed in each of the systems, technically and from a capability point of view, and then he recruited on the back of culture and values. He got
interesting, just very much in line with what you're saying. One of the questions that came in is one of those businesses that you and I have discussed, that moving from the one-man band to the first small team. It sounds like that a lot of what you and the Aurik process fixes is all the issues that come up with doing that. So based on your experience, if during your presentation you could weave in some of the prioritization that you would have for a small business moving into that first team space, that sort of 1-man, 2-man, 3-man, 4-man band journey, because those are the issues that then carry on through the whole business, all the way through the ones that you end up fixing when there's 24, 25 people in the business.
Completely. And you're so right with it, because When you look at the origin of a business, normally it starts with one or two founders. They build a very tight team, a very well-engaged team, a team that's easy to communicate with very frequently on an ongoing basis. The moment the business grows to a point where the team, which really was made up of everyone understanding everything all at the same time and working together to deliver it, needs to see a team that starts to narrow down and deepen in perhaps, let's say, the lead generation or lead conversion or lead fulfillment elements of the business. That's when the baton from one team member to the next team member begins to drop. That's also when you don't know what your fellow teammates know and don't know. So there's a huge amount of assumption that's used in trying to maintain the dynamic of that team. The argument that we put forward is that the systems are built in such a way to deliver on the promise and the positioning of the business. It's the systems that guide the interactions from team members as well as activities all the way through from lead generation to lead conversion to lead fulfillment. If the systems are well built, the individual cogs of the business in lead generation, lead conversion, and lead fulfillment begin to fit together more effectively. And on top of it, because systems are measurable, you can see where they're fitting well, where they aren't fitting well, and that then engages the team on a fundamentally different basis.
Thank you.
Once team members are in place, so team members are brought on board to operate systems of which were built to deliver on the proposition of who you serve, what problem you solve, and the experience you create in solving it. That then, those three elements stack up to release the business owner's time from operations to focus on next level growth. And next level growth really has two or three elements to it. If you have 70% of your time to focus on strategic growth initiatives, and you know that the way you built the business through a clear positioning, a solid system of delivery, and a team that understands that system and is managing that system effectively, it puts you in a position where you can look for significantly more interesting growth opportunities beyond just simply organic growth. And I'll give you a really good example of where we managed to achieve that with one of our current clients, in fact. They're a business that's involved in the rubber industry, specifically the rubber tire industry. Second generation business, founded, the father who founded it has been in the game for around 42 odd years. His son that came into the business fairly recently, well, not that recently, about 11 years ago. At the age of 36, he's in the business now. They got to a point where they were working in such a commoditized area of tires and vehicle tires and plant and equipment tires that they needed an area of distinction. When they looked at the retail environment, which is entirely price driven, they figured out an outbound sales service team architecture that sees their top salespeople traveling in these vans, literally, that are stocked to the brim with all the consumables that get consumed in the tire management industry. And they would go on these very long road trips on a frequent basis, constantly servicing very actively the consumables for all their many, many, many retail clients. What they found is that because they were knocking on the door most frequently, they were getting the business done. But what they also found is that the cost of servicing that business was tremendous. What we eventually did with them is we translated the outbound Salesforce team into a digital system that now sees the ability to have a virtual showroom constantly appearing on the screen of their various clients on an as and when basis that lets their clients identify the products they need through a virtual showroom experience, and through that maintain constant and reliable stock levels. With that, they managed to let go the vans, the minivans, the many heads that were required in order to travel those miles, the miles themselves, the petrol consumption themselves, the insurance on the vehicles themselves, increasing service to clients, and all the while, through that, enjoy the growth of it. Finding the funding to get that done required finding an equity investor that could see how a physical distribution system could be translated into a digital distribution system on the back of how the physical system was built. That business will close off. It's in its first year with us still at this point in time. It came on board at around 6.6 million pounds a year. It'll close off in its first year only at 7.2 million pounds, but already when I look at the numbers on it, there's an 11% increase in the profitability on that revenue. The last piece is, of course, if you've built a business in this manner, where you distinguish yourself through the problems you solve and the experience you create rather than product, price, or service, you have systems that articulate and deliver that consistently, you have a well-versed team that knows what to do, when to do, and how to do it because of the systems, and you've shown and demonstrated you can increase your profitability as your turnover grows, it puts you in an ideal position where you have a business that operates largely beyond you, that has capital growth baked into it, and has income generation capability over a 12-month period. That's what we define as an asset of value. And that's the kind of business that achieves the valuation multiples on the back of keen deals that don't require you to stay on for 3-4 years afterwards to get the deal done.
I think about one of the other things that you and I shared when you and I met with our data. I hadn't done the data for the UK on a number of businesses that failed to sell, but I'm going to suspect, because the data that I did do, which was that 90, I think it's 96.4, you got me with your 94.6 there, 96.4% of businesses in the Western world, this UK, United States, New Zealand, Australia, South Africa, fail to get beyond the 0 to 9 staff bracket and $1 million revenue. And as long as the conversion isn't more than 2 to 1 ratio, that's Aussie dollars, New Zealand dollars, Canadian dollars, American dollars, etc. South African rand, obviously very different. But still, that horrified me that 96% never managed to get past that £1 million kind of black hole. And what I loved about your whole process for me was it fixed that one issue that I've never been able to quite fix as brilliantly as you've done it with your clients down there. That hole, and I've always believed that getting past that 1.5 million, I certainly know that 1.5, 2, 3, 4, 5, 6 million turnover businesses are easier to sell than a 750. Nobody buys a 750 turnover business. So
Nick, what's interesting about that stat is in the UK, more or less around 97.8% of all businesses in the UK sit below that 1.5 million mark.
Yeah, below the 1.5. I think it's the stats I did, because we break our government breaks our numbers down to 0 to 9, and then 10 to 250. I think, which is a huge next and then 250 and above. It's kind of SME or small business, medium businesses, and corporations. It's a bit of a broad bracket. If you take out all the 0 staff businesses, and there are quite a few of those, and the one-man bands, 4.1 million one-man bands in the UK. So from your Uber driver through to your window cleaner, classified as a one-man band. Then the number of businesses that get past that million turnover is tiny. It is tiny.
Yeah, very, very small. In fact, the numbers were on around 5.7 million businesses in the UK. 8,000 businesses do more than 30 million pounds sterling a year of annual revenue, and about 240,000 odd only do between 1 and 30 million pounds of annual revenue a year. I mean, they're massive stats. But what's interesting about the 94.6% of businesses that don't get sold, Nick, a lot of those businesses are profitable businesses. They're doing upwards of 7, 8, 15, 20 odd million pounds a year in annual revenues. The reason they don't get sold is because without the business owner there, or the lead team there is no business. And the moment you get into a situation where you're running a 15, 20 odd million pound a year business, you're way out of the ambit of a private buyer. You've moved into the corporate space where corporates would be looking to acquire you. And what corporates are looking for are sustainable revenues. The last thing a corporate can afford to do is make an acquisition. Off you go the very next day to go and live in the Caribbean or wherever it might be. And the acquisition itself falls to pieces because you contain the relationships, all the institutional memory, and the team falls apart without you.
So just quickly, I need to do this while I forget, perhaps. Sorry to interrupt you. Somebody just asked a question, a live one, saying, I've signed up to the Aurik website. Can I schedule a phone call for tomorrow? I ham-fistedly said I'd answer it live and then clicked answered and it's disappeared. So my apologies to the person that answered that. The answer is yes. If you just send your details up again or just pop your name back up on the Q&A, I'll remember who it is we need to speak to. So I apologize for doing that. But yes, we can have a conversation tomorrow. Another quick question, Pat. Pre-revenue and pre-funded startups have effectively no help in this environment. You're telling me. What is your understanding of what could be available to support, and what would your suggestions be outside of that to maintain progress? Now, Damien, can I just ask, do you mean funding support, or are you talking about the type of support that we do, which is consult, train, teach, coach type support? So if you could just tell us that, then I'll get, thanks Javid, I'll get Pav to answer that. Another couple of questions that came up, Pav, if you want to take some notes. How would you deal with multi-office, multi-branch, so the slightly bigger type of business? So multi-office, multi-branch. What's our understanding of the help that could be available in this environment? Different levels of skills to management teams. So, you know, is my team ready to do your process? Can you help my management team depending on where they are? That was another one. One of the ones that I have had asked before is, just funding, thank you, Damien, do you have to have special knowledge of my industry to help me? So do you need to be a lawyer to be able to help me in my legal practice? Certainly in my consulting business that I'm running in the UK, before meeting you, the answer to that for us was no, but they're keen to know whether you could do that. I think that's enough. There is a Q&A box at the bottom of the screen as well. Please, I will keep an eye on that, and also the chat. So if you've got any more questions, then please jump in and keep going. So Pat, let me pass that back to you for the minute.
So Nick, let's look at the multi-branch question. That's always an interesting question because especially in the retail environment where things are extremely competitive, you sit with massive overheads plaguing you. Should you have 10, 15, 20, 30, 40, 50 branches around the country? The big issues that we've seen over there, and where we've done quite a bit of work, in fact, in the automotive sector around that, whether it be parts or whether it be dealer principals and automotive principals, has been about getting consistency of service, consistency of experience, most importantly, consistency of reporting, but not only on financial numbers, but on behavioral numbers within each of the branches itself. Because if you think about it, going back to what differentiates a business, if you can clearly define that you solve a problem, and you can clearly define the type of experience you want to create in solving that problem, so that a client who engages with you will engage with you again and again and again, so that a client who engages with you will tell the world about the experience they've had with you. In a branch environment, it is particularly challenging. And the work that we've done over there is to really create the client engagement systems that are required in an optimal situation, with the view to have that then implemented and mirrored right across the branch network. It's easier said than done, because once that's done, how do you know that those client engagement systems are being deployed on a consistent basis? If you go back to what I was talking about earlier, a system for us is a set of activities put into a sequence that create a measured outcome. If it can't be measured, it can't be managed. So any system that cannot be measured is not a system. It's a hope or a prayer at best. And that's how we deal extensively in the multi-branch environment. You want to create the same client experience, especially if there's a brand against which the branch has been associated to, because the brand is defined by way of an experience. Skills in the process.
I had a fund manager who managed quite a big portfolio, who was also buying private businesses. And I said, you know, what's the one question that I would need to ask or I would need to answer for you to know, well, if you could only ask one question, what would it be? And he said, how many products have your client base bought? He said, I want to know what their loyalty is like. If they bought more than 2, if you've consistently sold them more than 2, I'm interested. More than 3, I'm very interested. More than 4, I'll buy your company.
Yeah.
So and it's not bought the same product 4 times. You know, I bought a car from you, but I bought a car, I bought servicing, I bought finance, I bought cleaning, I bought, you know, maintenance. They bought 4 different consistent things. And that was quite fascinating to me. So your delivery of system was what fascinated. That delivery, that consistent delivery of system is why people come back for the second product.
Completely right. It's the consistency issue more than anything else. You know, there's another way to look at it as well. There are a lot of businesses out there that run very big projects. So we see it extensively in the industrial landscape. You know, it might be in construction, or it might be the establishment of plant and equipment. It might be, you see it in air conditioning businesses, in pump businesses, in DV board businesses. You see it extensively in that engineering space. And then the big question is, well, I win the contract, I gave a good experience, but I've been treated like a one-night stand. In other words, the next opportunity that arrives, there I am again, I've got to tender again, and it always boils down eventually to price. How do you distinguish that kind of business in that kind of environment? And again, it goes through experience. I'll give you a really good example. There's a business we worked with in the mining sector. South Africa's got very, very deep mines, complicated mines, dangerous mines. The deeper you dig, the more you have to pump water out of that hole. If you don't pump, you can't blast. If you can't blast, you can't extract ore. If you can't extract ore, you have a £3 billion asset sitting idle. The pump industry is highly competitive. Every pump brand right around the world locates itself over here for the simple reason that there's such demand for pumps. And the pumps are complicated to manage too. The way that the mining sector behaved was called break fix. The pump breaks, you pick up the phone, the pump is replaced the next day. When the pump breaks, it might just be a simple ball bearing that shredded itself. The pump in its own right is good, but the shaft engineer is being managed and measured on ore extraction. So he or she has no interest in fixing the pump underground and delaying blasting and extraction for 2, 3, 4 days. Absolutely no interest in it. They simply want it replaced. As the economy tightens, the experience people need and the problem they face changes too. So for example, the mines got deeper, they got more dangerous. And through that, this client that we worked with that supplied pumps and competed on price, purely on price, eventually realized that there was a different approach he could take. He went and he put the pumps in the ground without charging for the pumps on a capital basis. He turned around and he said to the financial managers of the mines, forget acquiring this asset, forget the capital expenditure needed for it. I will install the pumps, I will install the pipes and the valves, and I will charge you simply per hectoliter of water pumped and eliminated from the hole. It turned a capital-driven, a project-driven business into an annuity-driven business, Nick, where he sits in a situation where competitors with better pumps, bigger pumps, cheaper pumps simply can't compete, because as the problem of finance became an issue in the mine, the problem they needed solved changed. It wasn't only water elimination, it was water elimination with no capital outlay. That formed the opportunity for him.
Yeah, certainly when we've been talking to our clients, one of the things I liked about your approach was people who go into a recession and are still trying to sell a boom product with a knockdown price instead of transferring to a bust product with the correct pricing, and then fail to switch again when the market bounces, and are now just trying to sell a bust product at a premium price. Doesn't work. It needs to be specific. So that's a good example of one of your clients that managed to pivot. I'm keen to get 2 questions answered, which was, one is, do you need to be an expert? So do you need to know about my industry? And the other one, which has just been asked, which I think is quite relevant, because I think you've demonstrated, so I'd love you to talk about how you did this with your business, is what did you do to pivot your business in specificity for this reality, and what do we think is going to be the difference going forward? Now, you and I have had a lot of conversations about what we think is going to change, how the world is going to look different. Certain businesses will definitely be able to work differently. If you run a restaurant, going to be hard to do that virtually. But so there are certain businesses that will have to go back to the old version of normal. But what are we going to do differently? So specifically, how will your asset value offering help post-COVID, and what have you specifically done to your business, and do you need to be an expert? So kind of snuck 3 questions in there.
Yeah, so let's talk about the industry expertise first. You know, we were very, very clear on our positioning, and we put forward a position that says we will work with businesses that are established, so no startup businesses, that do revenues up to around £30 million a year. Again, so we cut off as we move into the corporate sphere, because that's a very particular set of expertise. Could we work with corporates? Yes, we could. Do we want to work with corporates? No, because we want to remain very, very focused on a particular part of the growth life cycle that most businesses should traverse. And typically, in dollar terms, they start at around $1 million up to about $30-odd million a year. So we narrow down and focus on that very specifically. Within that, we've worked now cross-sector, cross-industry, and the best way for me to describe it is, imagine on an Olympic field, you have 3 athletes. You have the shot putist, you have the sprinter, the 100-meter sprinter, and you have the long jumper. When you look at those 3 individuals, they all have fundamentally different bone and body and muscle mass shape. And the structure of their bodies is absolutely well suited to the discipline of their sport. The shot putist will be shorter, broader, thicker set. The long jumper will be thin and lanky and stringy. And the 100-meter sprinter will be built like an Adonis, full of muscle and strength. If we remove the bone density, the skeleton, and the muscle mass, we're left with organs. The heart, liver, lungs, kidney, and spleen. We see ourselves as organ specialists in a business, marketing, sales, fulfillment, people, and money systems. They all apply in every single business, irrespective of what sector or industry you're in. We see ourselves as a business that works with that business owner to get the organs optimized and then integrated, coordinated, and working together through the brain. And the brain we build out in the dashboard that I mentioned a little bit earlier, where we track our performance and forecast the growth rates of the businesses we're working with. So no, we're not hamstrung by any sector, by any industry, cool, because we are specialists in looking at the organs of anybody that we work with.
I'm conscious of the time now. I keep throwing too many questions at you. You won't get a chance to finish, but a quick one. The 30-second version of your pivot and what you think we're going to be doing post-COVID.
So look, it's very, very clear to me that what led to your success pre-COVID will not be what leads to your success post-COVID. And again, working with an asset of value frame, I go back to why. Will the product that you have be relevant post-COVID? Absolutely it will. Absolutely it will. But will the problem that you solve and the experience that solves that problem be required to be fundamentally different for your customers and clients? Yes. If you take the same old product and you provide it in the same old way, you will fail in this new economy, for the simple reason that people have changed their problem sets and require very different experiences. I think that the businesses that move fast to understand what their clients want differently, whether it be through the economics, whether it be through how you engage with them, whether it be through how you fulfill your promise to them, and then turn those mechanics into the systems that deliver that consistently, will put themselves in a position, Nick, where 3 to 6 months from now, firstly, you'll be trading in an economy with half your competitors gone, and then with the majority of the competitors left, not having made the necessary changes to the way they service, engage, and fulfill client obligations, making them far less relevant than you would be. I think 6 months from now, you will enjoy a remarkable growth opportunity. You'll make up everything that's been lost in COVID, plus some.
Yeah, our economics analysis during the W recession was very much those who let go of the fear the fastest and shift the quickest will get all of the upside. The challenge always is the market turns very quickly and the economy turns very quickly. It normally recovers 60% of its previous loss in the first 6 months, and most people don't get in until month 7. So they miss all of that upside. So one of the things we're encouraging our clients, and I know you are as well, is that we need to be doing this now. I know you're going to talk about why now is the right time later. So I want to move you on, because if I get stuck into more questions, keep them coming, please. If we can't answer them live, then we'll come back to you. So on the Q&A or the chat, please keep going through. But Pat, let me pass back to your presentation.
Fantastic. So how do we work with you then in that environment? The first thing that we do with any client is we run diagnostics. Every business has already got its own situation, its own circumstances, its own asset stack. What we do is we run diagnostics in order to understand what is there and what is missing in relation to building a scalable business. From there, we then craft a customized growth plan around the business itself and the circumstances of the business owner. From there, we move immediately into creating a system of delivery. Remember, when I spoke about the systems, it was specifically talking about systems as a means to scale a business. The point you made earlier, Nick, where 6 months from now, there's going to be massive demand, and if you're not ready for it, you will lose it. There are a couple of things. Firstly, you will lose it if you don't have the right positioning, and more importantly, you will completely break your business is if you do have the right positioning, but because of the demand, as you meet that demand, it completely breaks your ability to fulfill your promises to clients. It destroys a brand in many ways. We build that over a 6-month period, and then the rest of our time with the client is always focused on growth. And there's a very good reason for it. About 60 to 70% of our fees are based on growth performance. We make very, very sure that the majority of our time together over the 24 months is growth driven and growth orientated. So let's just talk what's involved in diagnostics. We do positioning diagnostics. We look at what business systems you have, what's missing. There are 207 activities, more or less, that make up an integrated system of delivery. We look at finance, we turn it into numbers, ratios. Ratios are rich in story. And then we do some team dynamics, looking at you and your team. And the reason it matters is because, as I said, every business and every business owner and all the circumstances in the business are fundamentally different from one to the next. We do not believe that any growth program can work unless it's customized around those specifics. The diagnostics give us the data removes the story, it tells us what's there, tells us what's missing, and we build bespoke to that data. The next thing is it's customized, and very clearly, as I mentioned earlier, gaps need to be identified that before we accelerate growth, we can close the ability to fulfill it. In other words, create scale. That then leads to a series of goals customized entirely around the business, and that then sets out the customized growth plan. The systems that I mentioned, again, marketing, nothing to do with advertising, only measure how many leads relevant to your business do you generate month on month on month for 12 months. Sales conversion, how many of those leads convert to clients and customers? Operations, how do you fulfill those leads in a consistent, reliable manner without creating chaos? And then the final system sets are around money, administration, and data. How do you know that everything is working profitably, but more importantly, that all the systems are correlating and orchestrating well in order to deliver on your positioning?
Interesting question. I know that dashboard gives you a massive amount of information, and I'm a big fan of dashboards. I used to use them to run my businesses. Do you find the clients find that dashboard useful as well?
Oh, yes. Oh, yes. And I'm going to show you. The next slide, it really has a few of the dashboard elements to it. And I'll show you the main reason why. I'm very excited about the dashboard. It's constantly evolving. It's constantly developing. And it's got some remarkable intelligence built into it. So from a system point of view, the view that we hold in the work that we do with you, once positioning is well defined, we define all the individual systems to optimize in their own right. But more importantly, like the cogs of gears coming together to make the engine purr, that they interlink and connect efficiently and consistently, so nothing falls through the middle. It really is what the definition of scale is. At the same time, systems let you get the right team on board, and from there, it's that releases your time from daily operations to focus on next level growth, where we hope to be doing at least 3/4 of our work with you.
Pam, I've got to ask you a question, because you've just said something that in 20 years of doing this, if I had £1 for every time somebody said, how do I get the right people doing the right thing and motivated and stay and keep and find and etc. And you just flipped across that like, yeah, we get the right people doing the right thing. Talk to me about why that works in your model once you've built it inside a client, because that's the $64,000 question in almost every client I've ever worked with.
So firstly, Nick, if you have a very clear sense of what people are meant to be doing and it's measurable, then you manage by measure as opposed to anecdote. If you look at it, who are the most difficult team members to ever manage in any business?
Usually the boss, in my experience, but I know what you mean.
Well, besides the boss, because we'll manage the boss, especially because we behave like partners in every intervention.
Yeah.
But sales.
Yeah.
Sales. You know, salespeople generally are very optimistic. They are future forward focused. Every conversation has potential in it. If it's not sales, it's marketing. Because marketing is constantly looking to enter into new opportunities, to craft new leads, to generate new leads. And between sales and marketing, they can really send the business in multiple directions. And through that, it completely collapses the underlying fulfillment capabilities of that business. If you pulled in one direction today, another direction tomorrow, within one service today, a different service tomorrow, and you cannot get consistency in how you fulfill your promises and obligations to your clients, it means you're reinventing the operating processes in your business, literally from day to day or from client to client or from opportunity to opportunity. If you articulate the business well in systems, it's that lets you find, firstly, the right person to operate those systems, and secondly, to manage them through numbers. What we have certainly found, you know, a question I get asked, well, who would want to be a systems operator? Because that's what we call job opportunities in an asset of value. And I'm saying there are a lot of folks out there who want to be sure that when they take an opportunity, A, they understand the opportunity, B, they know they can deliver on it, C, in doing so, it can be measured so that finally they can earn opportunity within your organization, whether it be the performance.
Yeah, if I had £1 for every time somebody said, well, I started here 3 months ago, but I'm still not quite sure what I should be doing. Like, that's crazy. And if this stops the next month's going to be the best month ever sales report I have at the end of every month from my old experience with salespeople, always next month was going to be the best month ever. Then that was one of the things I loved about when I first met you. I thought, if I could systemize just that, oh my goodness, what a difference that would make.
So Nick, I'll just share one insight around that that's really fascinating. And I got involved in a lot of these valuations. They're called inside sales valuations. It's used extensively when you're looking to raise equity funding for significant next level growth. What those types of funders look for is they look to see how you generate leads on a consistent basis, and the quality of the leads is such that on leads generated, the conversion process is consistent. If they can see that and not attach that to talent in the business, but rather how the business is built by design, in other words, the systems of the business, they then understand if they put $1 million or $2 million or $5 million into the business, and that's going to be invested in marketing, because of how the systems generate the leads and because of how leads are converted, the £5 million of investment over a year should yield, for example, 1,000 new leads, and on conversion rates of 20%, 200 new clients, and on those 200 new clients, the return on the investment and capital appreciation based on the £5 million investment. That level of thinking can only ever be driven and negotiated on the back of a systems mindset in terms of how business operates.
I have to say, when I came down to South Africa to meet you guys, one of the things that excited me most about what I saw was you running your own system, with a consistent client acquisition model, which I've been trying to replicate for 20 years. I reckon we're pretty good at getting clients on in the UK for our business. I've never seen a system that works as well as yours. So if you did nothing else but just followed your own system, I wanted that over here. So that was one of the things that blew me away. You swallowed your own Kool-Aid as well.
Yeah, we do. We live it every day. So let me just talk to this. It's a little bit of a geeky thing to talk about because dashboards excite some, don't excite others. This is an example of there are many elements to the dashboard. But if you look at this over here, we have a good sense of whether we are on track or not with regard to building the systems. This particular business's dashboard says 75% completion. We have a good sense as to whether those goals that I mentioned and spoke about earlier, Nick, if we're on track to achieve them or not. The goals that get set get broken up into monthly measurable milestones. And at the end of every single month, we have a session using the dashboard to understand performance against the goals. Where we're ahead, we ask why. Where we're behind, we ask why. And where we're on track, we ask why too, because we should be constantly pushing the envelope in all instances. What is absolutely crucial is that when we set those goals form an understanding, a contract between us and the client, saying in the way those goals were set, what those goals are, irrespective of the environment, we are going to achieve those goals. If they can't be measured, they can't be attained and can't be achieved. The second screen over here has a few elements that I incorporated into it. You can see over here the number of leads generated. This is one of many system indicator sets. So if we understand what problem we solve, we understand the experience needed for that client to engage with us, and we understand how to market to them, in other words, create messaging that would resonate with them, that in seeing the message, they can see, we hear and understand the problem they have, and in how we communicate the message, it creates the right experience. Once that's built into a system, Nick, it provides us with an opportunity to say to the marketing system operator, here are the number of new leads generated on a monthly basis indicated over here, and we want to see growth from baseline. So we look classically to see how many leads were generated over the last year. We look at the average lead generation data on a month, and then we seek to improve and grow there, over, and above. This is one such system of 4 or 5 systems that make up lead generation. One such system of 4 or 5 systems that impact sales conversion. The second thing that you can see over here is a client concentration indicator. It ties into cash flow. All of these tie into valuation because we look to increase not only turnover, profitability too. So through the dashboard, the goals are tracked. We hold each other accountable for them. All the systems that are built are tracked and measured so we can see them. It creates a visual representation of the organs of your body, in a sense. And risk and performance is highlighted. Through the data that we collect in working with you, we organize the data in such a way that we can forecast ahead fundability, profitability, sustainability, and growth momentum in order to indicate where, in order not to impede the growth, funding might be required to support the constant momentum we've managed to create. There was that question you asked me earlier about, does my team have the right skills? Yes, they do.
There's potentially 2 questions there, Pav, which I can add in because, look, I've spoken to some of your clients, so I know they do, and I know my clients do find the time. But one of the questions that comes up is, A, are my team good enough to do this? And B, have I got enough time? So if you could kind of tie in those two, what's the kind of commitment from the client? I know my clients always say, oh, how much is this going to take? And they're always surprised by how little it takes, but the truth is they still ask.
So what's wonderful about the approach that we take is every system is built either by yourself, but I would argue you should have your team involved too. Because in the instance that a system is built properly, so let's go to lead conversion, the sales system. If we understand what activities need to be put into what sequence that are measurable, it means that everyone's involved in crafting that system, putting the individual bits together in the sequence that can be measured. because we work with you in such a way to do it practically, should you have your team on board in that instance, working with you to build it out in the business itself, it means that your team is trained on the systems as well as co-creating the systems in such a fashion that when that system has been completed, they're already capable of operating it. It's really important to get that done right, because if you do it on your own right, and then you expect to try and capacitate your team to do it, firstly, you're wasting time and losing time. And secondly, you have a particular view, but if you've got part of your team members who have the coalface every day, they might be able to contribute, and mostly do, very definitively to improving the performance of those activities.
Cool. So do you find that this is fairly easy to find the time inside businesses to engage in this process, Pav? Do you get much feedback from your clients?
So let's talk about that. How do we engage?
Okay.
There are kind of two main elements. The first thing we do is, if we work with a client that's really interested in coming on board, we do a chemistry match. We look very carefully to see, would we be able to get on with each other? It's an intimate process. We're going to meet each other 3 times a month for 2 hours per session. We develop long relationships and we develop intimate relationships. In truth, Nick, what we're really looking for over here is the team that we're working with, a team that has the ability to implement, because we don't do it for you. We provide you with the structure, we provide you with the activities, we provide you with the facilitated engagement around how it all works, but we can't build it in the business for you. By definition, we can't do that. So we look for a team where, first, we would have good chemistry with each other and we enjoy each other's method of engagement. We look for a team that, with respect, doesn't know it all, because the moment you know it all, there's nothing we can provide you that would be of value. And we look for a team that can implement. Cool. The next thing we do is we look at the business and say, in doing what we do and how we do it, will we have a growth impact? Because if we won't, we can't engage, for the mere fact that 65% more or less of our fees are dependent on that business growing. So you can see the importance, of firstly having good chemistry with the team, and a team that will bake in the activities to the business. If you bake it into the business, you will get the growth.
It was one of the things I liked about your model, is that you've got skin in the game.
Very much.
That was important for the SME business owner. They're much more connected to you, willing to play on part of the upside than they are on fixed fees. So,
yeah, very definitely. It makes our selection process very definitive. At the same time, what that does in the engagement process is we provide an opportunity. We call it an investcom session. So let's say we really like each other, we're on track to work with each other. I would then ask you to present your business to 3 of my senior facilitators, because what they are there to do are a couple of things. Number 1, they want to confirm chemistry and fit. Number 2, they want to confirm impact. In other words, in doing what we do and how we do it, will we have an impact? And then most importantly, we want to give a client an experience of what those sessions would be like. A client needs to turn around and say, hang on a minute, Aurik, do we have a good chemistry with you? And do we understand exactly what it is you'll do and how it will impact growth in our business?
Yeah.
So we do it almost as a gap closure or expectation gap closure process before we engage. And the reason we do it that way, Nick, is because once we engage, we are in with you and you are in with us. We commit. And whether the economy grows or doesn't grow, whether things happen not according to plan in the business, God forbid someone gets injured or someone can't be there, or there are issues that happen, like issues happen in life. We are there through thick and thin, and we're there for the ups, we're there for the down. We make our commitment at that point in time, prior to the final contracting. So yeah, I mentioned time, 2 hourly sessions, 3 sessions a month. We do it over 24 months. The diagnostics take about 6 weeks. The scale systems, we try and focus on that in a 3 to 6 month period. It doesn't happen immediately. We want to create scale before we press the accelerator on growth, for the simple reason that we can't afford to have business failure. The money, yeah, it does. There's an investment that gets made, and we've got three elements to our fee, Nick. The first is a diagnostic and provisioning fee. The diagnostics are extensive. They are also, on our side, very expensive. The single most expensive thing we do. You can imagine when you do a systems diagnostic across 207 activities in a business, there's a certain kind of skill that's required, and there's a certain amount of time that gets invested in it. And then there's a lot of moderation around the inputs in order to map out where the gaps are or out in the business itself. So we charge a small diagnostic fee, a small monthly management fee, and about 65% of our fee is based on growth or growth performance of the business. We typically attach it to revenue because revenue is very easy and simple to measure.
Yeah.
And that draws me to the end. Very happy to receive some more questions, Nick.
Cool. Look, first of all, I just want to say thanks once again for taking the time. I'm excited because I know that what Pav didn't tell you in his conversation, which blew my mind, we run a leadership forum, which Pavlo very kindly came and sat on in week one, end of week one of lockdown. And at that time, he had pivoted his entire business of 450 plus clients from a virtual face-to-face, 75, 80% face-to-face meetings and probably 20% Zoom. He pivoted that entire business to 100% Zoom. And what that enabled me to understand was because we wanted Pav to come to the UK, because I've got so many clients that we've not been able to help or have helped but still need the extra work that he does specifically. Because I was expecting him to have to be here face to face, him being able to pivot his whole business to Zoom means that we can actually now deliver. My understanding is the first 3 clients in the UK are already in the process of going through the InvestCom at 4, are already on. We initially said we wanted 6, what we would call partnership clients. And I convinced Pav to put in an investment in place to do that, so that there was the first 6 clients we are very much asking to come on in a partnership space with us. In other words, we'll throw everything we've got to help you. If you could throw a little bit back to help us in anglicizing, I don't think we'll have as much problem taking Australian words out, taking South African words out rather than we did taking Australian ones out, but it's to help us work with that. So we know we've only got 2 slots left for that. I think I know who those next 2 clients will be. But the truth is, we've got space for lots because we've got currently 40 very, very top-end consultant coach facilitators in pipeline in the UK being trained now by the South Africans. Pav's got over 150 plus trained, experienced facilitators in South Africa. And because we've got this new Zoom methodology, we are now delivering now. So we do know that's possible. So Pav, thanks for coming to the UK now, albeit virtually. It's been hugely helpful.
No. Well, let's talk about why now.
There's a couple of people have asked for meetings post this, so I'm saying to them, yes, let's set that up. Somebody sounds like they want to get on with it straight away, which is great. Thank you. I absolutely think you're making the right decision, but just walk through why now's the right time. I know why I think now's the right time, but your opinion, why should we be doing this now? Or why should we be investing in our business now?
So Nick, I think now's the right time to reset. You know, we spoke about the changed lived reality of your customers. And I'll be very surprised if that doesn't apply to almost every single business globally right now. In fact, I know it does, because in the last 4 weeks, I've spoken to over 45,000 SMEs in South Africa and in the US. Everyone is saying what we did before doesn't seem to be finding traction on the ground now. They're absolutely right. The way to reset has to be customer-led. It's critical to do it, and it must be measured through diagnostics so you can be sure that what you think is the reset is actually the reset. Once you've got that right, rebuild through systems. And I think, honestly, between now, 6 months from now, Nick, the opportunity to reignite revenues through people operating the systems, giving you the space to focus on next level growth, will be there in 3 different ways. Firstly, as I mentioned earlier, 50% of your competitors that you had pre-COVID are unlikely to be there. Secondly, of those remaining, many would not have gone through a very deliberate structural process to reshape what they do and how they do it to be relevant to the post-COVID or post-lockdown period, because I think COVID is here to stay for a good 2-3 years. They won't be relevant. And then the third opportunity that we're seeing, Nick, is if you built a scalable platform, you'll be able to eat the lunch of your competitors who have not changed and adapted sufficiently to meet their clients' demands. But also, there will be multiple opportunities to pick up businesses, to pick up stock, to pick up talent, to pick up plant and equipment at 10 cents in the pound or 20 cents in the pound, because that's just the nature of the environment we are in. I really do believe that there is a bright business side to the COVID economy, as much as it doesn't feel like there is right now. And that is that in that 6-month period, if you get it done right, you'll have a once-in-a-lifetime growth opportunity.
Well, we certainly, the predictions we've been running on for market reset, last 2 years I've been standing on stage saying any minute now we're going to have a market reset, same as the 87 crash. It'll either be Trump or it'll be Brexit or it'll be something. Nobody expected COVID, and COVID has created a different version. It's created an L recession, which is a straight down and then flat for a while. But very, very quickly, once you know it's that, you can start looking at the cycles. And the cycles we suggested almost immediately were 18 months, which means that in 12 months from the start, so by September, October, November this year, you should be in a position to be ready for a spring 2021 launch. Even the most pessimistic VC reports I've seen are not talking about much later than 2022, and the really pessimistic ones in some industries 2023. But the truth is 2021 is likely to be the upside. No good getting ready in spring 2021. You have to be ready to go by spring 2021. So we've got plenty of people now who are jumping on saying we need help to get ready. I'm talking to a client this morning who was raising capital to go on the acquisition trail any minute now.
And Nick, you know, I've got to share a view. It might be a very South African view. I really don't care what the economy does. And the reason I don't is because the South African economy has not grown for the last 5 years. And yet our clients have run average compound annual growth rates of almost 30%. And the growth there has come from outcompeting competitors. That's where the growth came from. If a country's economy is not growing, it doesn't mean that the opportunity to grow has been robbed of you. It's simply a mindset shift and a business model shift. If you get the business model right, and you build an asset of value, you will outcompete.
It is interesting that one of the clients said, if he can grow businesses to 29% in South Africa, then how quickly can we get him over here? So yeah, I completely agree with that. Look, it sounds like we've got most of the questions answered. There's a couple that we've acknowledged, and thank you for those. We'll come back to you either in writing. I think a video of this might be available at some point, and the slide deck. If you want to work with Pavlo when he's over here, then give Julian at aurik.com, drop him an email. One of our guys will probably give you a call, one of Pav's guys rather, will probably give you a call over the next couple of weeks just to see how this went. We're always looking for feedback. Please feel free to go, loved it, didn't like that guy, Rickson, get him off, or anything that you're happy with, then please jump in and give us your opinion. We're just delighted that you gave up your time today to come and listen. Thank you so much from both myself and Pavlo. Have a fabulous week, have a safe week. Have a profitable and entrepreneurial week, and we look forward to catching up with you in the future. Pav, thanks once again.
Nick, thanks so much for facilitating, and I really appreciate it as always. Thank you so much.
Perfect. Thanks, everybody. We're done. That's a wrap.